first heard about the idea of crowdfunding for investment of real estate, I laughed. I thought it was the flakiest thing I had ever heard of. And then we looked at it pretty closely and we began to examine it. For those that are not familiar with it, it is basically marketing over the internet to have people invest in your real estate deal, whether it be an existing deal or an acquisition. And it seemed quite flaky, particularly with the word crowdfunding. So we looked into it and we researched it, and here's what we found. First of all, the legal structure is exactly the same as it has been for 50 years, which is a private placement memorandum and an operating agreement. And we also make sure that all of our investors are accredited per the definition per the SEC. That's a certain net worth and a certain income. And we have a third-party expert verify before that investor can come in that he or she is in fact accredited per the SEC. So once all those qualifications are satisfied, we can actually advertise. This was as of 2012, the Jobs Act, in order to generate new companies and give companies the opportunity to grow and expand. Advertising for crowdfunding was legally allowed. So we actually can go on the internet and go on to social media. So friends of mine at my poker game were mentioning the fact that they actually saw our most recent acquisition on their Facebook account and they couldn't get rid of it. They were complaining to me that it was all over the place. So it's actually, if you think about it, it's almost the same thing as the Sears catalog is to Amazon. Amazon has just figured out how to do it faster, how to make it more accessible, to have more products, but it really is not that, Amazon itself is not that big an innovation as you may think it is, because the Sears catalog used to have thousands of products on it. It's just that they can do it faster. So, for example, for the last 10 years, people raised money, not through crowdfunding, but they went through broker-dealers that were your financial planners, the guys that sold you insurance or stocks and bonds, and they charged 7%. And then the developer charged 2 or 3%, and then there were legal fees. By the time the investor got in, he was getting 88 cents on a dollar. So with crowdfunding, we bypass all of that. The total fee structure is about 1.7% to the portal that we use to do it. And so our investors came in and got a much better deal than they would in some of these older structures. And we've now done 2 deals, one for $9 million, which was an existing property we sold off a 49% interest. And we recently did an acquisition where we raised $6 million. And we're developing our own website presence where we're actually going to raise money through our own fund, all online. And the beauty of this for a developer is it's an unlimited reservoir of the ability to raise money.